For much more on the impact in oil, let's bring in CNBC contributor, RBC Capital Markets, Helima Croft. Helima, it is great to see. I can't think of anybody better to talk to on a day like this when we have questions about this supply coming onto the market. So
yes.
Pippa just talked about it. The president said it earlier, 100 million barrels. How meaningful is that? And if all this extra oil is coming on the market, why are prices up 2%?
I mean, Frank, what we don't know is, again, the composition of that 100 million. Was it released from sort of the floating storage, the previously sanctioned barrels that were on the water? We have been escorting more ships through the Strait of Hormuz, but it's not a huge number. Estimates are maybe 6 to 8 at most on any given day. It's 15, but we are well below pre-crisis levels when it comes to shipping traffic. And most estimates say that we have lost between $1 billion and $1.2 billion of oil from the market because of this war. So it's going to be very interesting to see how you round up that 100 million number. But again, we are still losing significant volumes every single day.
All right, so we are losing those volumes. When we're looking at the oil market in general, and the president talked about prices in the oil market, basically saying, in his mind at least, once the Iran war wraps up, prices are just going to dive right down. So give us your view on this. Just with all the disruption we've seen in the oil market, let's just say things were to end sometime soon. Do oil prices immediately take a move to the downside, or are there other factors structurally that are going to keep the prices higher?
I mean, I think you'll get a sell-off once we get some type of deal. But then the question is, how long is it going to be to fully normalize shipping traffic through the Strait of Hormuz? And what's incredibly important, Frank, and that was a big theme of discussions in Washington, is how does this end? If it ends with Iran exercising operational control over the Strait of Hormuz, charging a transit fee like they are doing now, you are not going to normalize anywhere close to pre-crisis levels. And that's why increasingly you have officials from the Middle East saying the U.S. must do more to ensure that Iran is not controlling the Strait of Hormuz. So it really matters, Frank, how does this end, along with when does it end?
All right. So we kind of hit on the possibilities and what could happen. Let's deal with what's happening right now. The president's saying there's going to be more strikes on Iran. What's your view of the oil market over the next, let's say, 30 or so days? We have 4th of July coming up, big travel time here in the United States. Demand generally picks up. Where do you see pricing going?
I mean, Frank, this is so crucial because if we are in this sort of stalemate right now, we are drawing inventories at an astonishingly rapid rate. So if we don't get an off-ramp to the war, if we continue to lose 10 million plus barrels, we're going to exhaust this inventory buffer. And then we're going to be talking about reaching tank bottoms for storage. And what's really important, Frank, is there are operational minimums for storage facilities. And people are saying, look, if you get below 300 million for the Strategic Petroleum Reserve, you are threatening the operational integrity of that facility. So it's going to be increasingly important to think about the volume of barrels in storage that's actually usable. So I do think there's going to be increasing pressure to bring this to a close, but whether we do so remains to be seen.